Okay guys, Tuesday the 21st of November, and I've just been triggered into a short position after this 11 AM bearish engulfing candle. So we're just continuing on with the videos that we have been doing for the past few weeks. So this cautious trading approach, risking £300 per trade. So on the FTSE today, well, first thing is for the past few days, we have been coming down and testing support at around about 7,340 and holding fast. However, for me, the market needs to break up above this zone here. So really the 7,415 level. And then if we see that, I would then be happy to look for the FTSE to make a stronger rally, potentially all the way up towards 7,440. However, whilst we're holding down below this level, I am happy to look for further weakness and bearish positions. So early morning, the market made a strong rally. Actually, early morning we came down and tested this 7,370 level, and we got a candle at 8:05 AM. I was watching this. If it had been a pin bar, I would have looked to get long, taking the market up to 7,387, but it just didn't set up properly. Now that's all part of trading. Also, you can have an outlook on a market. You can have a trade starting to set up and then it just doesn't line up properly, and then what you have to do is you have to skip it. It's all part of trading, and you're going to miss lots of, whoops, wrong one, you're going to miss lots of setups as a trader. The important thing is, following your plan and not allowing the market to pull you into imperfect trades. So we then pressed all the way up into this zone right here. We've seen some rejection. We then pressed up once again, and we started to see rejection once again. Now then we got this engulfing candle at 11 AM, just sitting below that central testing point when we had this double top. For me, that was a good setup. I got short as the market started to break down from the signal candle. Now, I'm also being cautious, using that cautious approach. So you can see on the screen, I have the purple lines. Exact same with the other videos. This represents my management point for the trade at these levels. Management point with this cautious trading approach. It's basically the first level that the market could test, or for me, the way I'm looking at it, is the first level the market could test, whereby it would then once again find its bullish sentiment, press up against me and stop me out. So what I'm doing with this cautious approach is, as soon as we hit this level, I just consider my stop to be at break even. If the market hits this level and then pops back up, you just come out of the trade at break even. What it means, you miss some trades that come back up and retest and then make the strong bearish movement, but it protects you from quite a few losses, and it's very beneficial, especially for beginner traders. But in all honesty, as I keep mentioning in these videos also, the more I do this cautious trading approach, the more I show it on the the live trade videos, but also the more I do it throughout the week, because I have been continuing to use it. And I actually find it very beneficial as a trading strategy. So that's what we're doing, waiting for the market to come down and test these levels. Now we do have a little swing point just here. So from overnight trading, around about midnight, the market just pressed up a little bit and created that swing point. So that could potentially be the management point. However, for me, let me just try and get rid of this line without deleting the order. For me, what I'm using is, although we've had that swing point, it was from overnight trading, we've also had that double top. So that's a couple of confluences. This is really where the market started to pause. Last time it pressed up, so during the market hours. And for me, that means this becomes the sensible area to look. What we can also see is, if we scroll back a little bit further, the market pressed up above all of this level of price action. For me, this was the sort of upper band of it. However, the entry point on the engulfing candle was sitting just on this level, meaning I'm entering, basically, I'm not entering and then expecting it to come down, test and bounce. I use that quite a lot in terms of trade entries. I won't take a sell position into a previous swing high. I won't take a buy position into a previous swing low. Again, it means I miss quite a few trades that would work out absolutely perfectly. But for me, it's more important to take that cautious trading approach, because I've found over the years that my trading personality doesn't like repeat losses. And by repeat losses, every trader has losses. I have losses. But what I mean is, 2 or 3 losses in a row. And also, my trading personality suits a style of trading whereby I won't trade at all for a couple of days, and I'll miss trades, and then I'll have one trade, which is a good trade, and it'll end up being profit, rather than taking 3 or 4 trades in a day, having maybe 2 losses, 2 winners, the next day having another 5 trades, having maybe 3 winners, 2 losses. It doesn't suit my personality. When I start to have those runs of losses, I start to make mistakes. And it's, being a trader, that's one of the important things. You need to identify your trading personality. You need to understand what methods suit you best, and then you just structure your trading so that it fits. Okay, so we may just pop up, and I'll exit at the break-even level. I'm just watching this trade. As I mentioned when I'm doing these videos, there's no way to tell which trades are going to do that. We just have to take the trades and then see what happens. So I'm not doing anything here, guys. I'm not thinking about anything. I'm just watching the position. If it pops up to the break-even level, sometimes you don't get it exactly on the break-even level. There we go. So we got -1 point, -0.1 point, and you just come out of that trade at, so basically at break-even. So that's the live trade for today. As we go over, I can't cherry pick the trades. I'm going to continue watching the market, see what happens for the rest of the day. But that was the trading approach, continuing on with the cautious approach to trading. Came down, touched that management point, it's pressed back up, it came back to the break-even level. That's the signal that the market is not, or potentially not, going to make that strong bearish movement that we're looking for when we are taking these cautious trades. So you just come out at break-even, you start to watch the market once again, and you look for that next setup that can offer you the perfect entry. Okay guys, so just to add to this video now, it's worthwhile going over. So we had our management point down at these levels right here. And what we can see is the market came down and tested. We then got out as it pressed back up toward the break-even level. Now, looking at this in terms of just a setup of a double top here, without using that cautious trading approach, the temptation would be there to wait for the pullback to retest at this central area of what is potentially then resistance from the double top, and then look for that wave back down once again. Now instead we came down, we identified that first area where potentially the market would move against us. As soon as it came back, we then got out at break even. Now as I've mentioned, it can be frustrating because at times you do pass up on winning trades. But the reason it is beneficial is because, well, look right here, it saved us from this loss, and losses especially for a lot of people are a lot more difficult to deal with. It's really, really important. I go over this in quite a few of the videos, but it's, one of the things that I really try to get across, it's one of the most important things that I can try to teach anybody who's coming to the trading world, is you don't just need to blindly do things when you're trading. You don't need to, one of the worst things you can do is just, go onto trading forums and read information on Investopedia and then think that is the gospel, that you have to follow their rules. It is not the case. With trading, it's all about finding something that, well, first of all, that works, but secondly, that fits with your trading personality and your trading psychology. It is so, so important. Now, for me, if I am not using the cautious trading approach, I would say probably 9 times out of 10, I would have held onto that trade for the pullback and the retest at this level, and then I most likely would have got out after this candle right here. So not for a full position loss, but certainly for more than break even. We got out at the just as it came back up to the break even level. So minus £1.80 we lost on the trade. Absolutely nothing. It's basically a break even trade. So yeah, I don't tend to just post up the break-even trades, or I haven't been doing it with this cautious trading approach, but because this setup has done this and it has protected us from that loss and then rocketed up, and it would have taken us out for a full position loss, it's worthwhile going over. Okay guys, so that is everything for this week. I hope you're all having a great trading week, and as always, I hope that was helpful. I'm James Orr, and thank you.